glad to get together with you and talk about fund administration. Why don't you introduce yourself and what you guys do?
Yeah, my name
How do we do
is
that?
Mike Szymanski. I'm the founder and CEO of Cedar Advisory Services. We're a third-party fund administrator for 5210 and other groups that are raising capital to invest in real estate and other investment opportunities for their limited partners.
Yeah, Mike, I have to say it's been an absolute pleasure. As you know, we worked with another third party, a fund administration firm, before we found you guys. And although they were sufficient, they weren't amazing like what we've experienced with you guys. So I truly feel like we have an advocate and an incredible resource when it comes to solving for both our back office needs, our accounting needs on the funds administration side, and then solving for all the little odd, nuanced problems that arise with investors. So it's been a pleasure.
Yeah, likewise. It's been excellent working with you as a client and sponsor, and a lot of that success comes down to communication between your team and our team and setting expectations of tasks that we're responsible for on a recurring basis, like monthly and quarterly tasks or year-end tasks, but also our team being available to support you with things that pop up during the year, like investors looking to be redeemed out of the offering or transferring their interest to a trust. And yeah, our team's been able to support a seamless experience for both you and your investors along the way.
I think what's most important for us as a sponsor when it comes to meeting deadlines and timelines and delivery. Um, one of the challenges that we've had in the past is, we've provided all of our required items by the first or second of the month. We have, 18 days before we actually have to report, and we were always up against that with the prior firm that we worked with. So with you guys, it seems like it's much more seamless. Usually we have, 5 to 7 days in advance of the actual reporting and distribution date where everything is ready and there's no panic. It's always been very seamless, so I love it. It's really been a great
Yep.
experience.
Yeah, that's the goal. And part of that is kind of leaning into the systems that are available to help make the whole process of running a fund or a syndication more seamless and more structured. And so we obviously use InvestNext to administer your fund. And that's what we helped you guys migrate to a few years ago. But that, along with, again, good communication and agreed upon cadence and processes throughout the quarter enable us to make sure that we're meeting those deadlines.
Let's talk about a little bit how having Red Cedar as a fund administrator serves the limited partner or the investors. So our
Yeah.
view is that you guys are a neutral party referee, and you get to report exactly what happened, and you're not discoloring it in any biased fashion. But talk a little bit more about how having a neutral third party in the middle gives comfort to the LPs.
Yeah, I think it's a few different ways. One is our experience. So not only my background as a sponsor myself in my past portion of my career, but also in supporting other groups like 5210, we've been able to see kind of the best in terms of investor reporting, financial statement formatting, and what gets disclosed to investors. And what we've kind of learned over time is the right mix of giving them enough detail that they can see what's important, and they can start to answer some of their own questions, or they can read and pull information out of the investor reports that you're providing with our assistance, to ask intelligent questions. So they're coming to you with smart questions about what's going on within the portfolio or within the specific deals. We are a licensed accounting firm. We are made up of several CPAs. That being said, we're not technically providing an audit or any sort of assurance services, but we are independent. We don't invest into 5210's funds. We don't invest into other client funds, and that does give us some level of independence, in fact. And so we are third party, and we follow accounting guidelines, and make sure that what we're supporting you and our other clients with is accurate and timely financial statements that the users, whether they're investors, lenders, or internal management, they're able to look at those and trust that they're accurate and reliable.
Let's shine a spotlight real quick on the audit idea. So as we know, More sophisticated investors often will ask the question, are you guys audited on an annualized basis? Um, let's talk both about the dilution, or the dilutive effect that that would have, especially on single
Yeah.
asset funds, and how, together with CBiz, who is our third party corporate accountant, our internal finance department, and Red Cedar kind of triangulate and mimic a similar thing.
Yeah, so there are cases when an audit's required, whether that's driven by a lender. There are some state level SEC requirements that may pull an audit in. And there's certain exemptions, right? Like a lot of the real estate specific syndications don't require an audit, depending on where they're headquartered out of. And so obviously having an audit in place gives a higher level of assurance over the financial statements that we're supporting 5210 and preparing. That being said, it's often extremely costly. A fund audit could cost between 30 to 50 grand per year. I think sometimes people hear audit and think that it must not be that expensive because they might be used to, for example, paying for an audit that is required by HUD debt. HUD required audit is not as in depth as a financial statement audit that would occur on a fund or on a syndication entity. And so there's pros and cons there. There's a lot of cost to achieve that level of assurance. But as you mentioned, uh, with 5210 as the example, if Red Cedar is preparing financial statements, portions of which we're responsible for the bookkeeping of, meaning like at the fund level, and then portions of which that the property management component of your business is responsible for. But we're putting together financial statements as an external party. CBiz, your tax CPA, is also looking at those. And then you guys as the sponsor, the principals of the sponsor group are also looking at them. You've got multiple eyes on them that the reality is if something's wrong, at least one of those parties is going to raise their hand, if not all three of them between us, you, Nate, and CBiz. And so in a technical sense, there isn't an audit here, but it's important to weigh the cost and the benefit of what it would require to bring that in, and whether or not you can gain your investors' confidence and trust without that additional expense.
I know that we've seen, if if there is nefarious intent, even with an audit, it's possible that the wool is pulled over the investor's eyes. We can look at publicly traded companies as an example, like Enron or something like that. Um, Speak a little bit to that, like how it can be manipulated anyway.
Yeah, I mean, in a lot of those situations, you need multiple parties with bad intent operating together. And so the example we just gave, you'd effectively need internal 5210, us as the fund admin, and CBiz as the CPA to all be participating to achieve that. And it's not realistic, at least, in our working relationship. Um, but there are other controls that we have in place that would prevent it from occurring. So examples are dual approvals on payments that are going out. I know you and Nate are often involved as a second check on each other in terms of whether it's underwriting or uh, the amount that needs to be wired to close on a deal, right? There's checks and balances there. From our perspective, we're often drafting and reviewing and auditing, for example, investor distributions, but you and your team are as well, and you guys are the ones hitting send to push that payment out. So I think it's important to point out that even outside of a public company atmosphere, the idea of internal controls are heavily present. They're there, and they also support in the goal of creating investor confidence and having, or at least mitigating the risk of fraud or any sort of bad behavior.
Yeah, I think it's a great point to highlight. There's no movement of capital anywhere in our business where a single person is making the decision and there's no oversight by anybody else. So even internally, there's at least three of us that are looking at that. Sometimes it's Nate and I as the partners, along with our controller. Sometimes it's a third-party CFO that's looking at it. So there's internal controls, but then there's also kind of that combination of internal and exterior controls. So um, appreciate you sharing that. That's really important to more sophisticated investors who are asking that question. Let's talk about the value that you guys bring to us. when Nate
Yeah,
and I started this business, we were doing all of our own calculations of distributions internally. I think we got to deal number three when we saw the snowball coming, and we knew if we're going to report on time and distribute on time, like clockwork, we're going to have to build either an internal office or back office function, which is expensive. I mean, how many people do you have in your office, Mike?
yeah, we've got a team of 14. And for reference, a lot of times when we price out what it costs to work with us, the cost might be equivalent of a senior accountant, maybe an accounting manager, maybe controller level. But for that cost, you're not just getting one person who might be good at several things, but not all things. But we're exposing you to staff through CFO experienced talent. When it's appropriate, we have offshore chartered accountants that can plug in to provide a cost-effective yet highly supervised support function as well. And so it's certainly a lower cost point with exposure to a whole lot of experience.
Yeah, I think the decision for us was pretty easy, and this was with our first choice to go with the other company that we worked with. When you compared the cost of gaining that horsepower and that talent pool versus building your own back office, that was a pretty easy decision just when you're comparing expense. But I think that the added combination of showing our LPs that we truly seek transparency was really powerful. If somebody as a sponsor is not willing to use a third party that could provide transparency, that potentially could be a red flag. But then the other one is we didn't want to do the work.
Yep.
So I think being able to, we're much more efficient knowing that, the daily work that we're required to do anyway is what's required. We hand that off to you and you guys pick up the baton and there's a little bit of back and forth to clarify, something on the chart of accounts or something of that nature. But typically it's a pretty seamless process and we're not required to do that work. So it was a combination of simplifying our business, managing less people, and then offering transparency to our LPs, but then not having to build that internal back office and have that expense on our books.
Yeah, I mean, I think it frees you guys up to focus on what really, drives growth within your business. And that's finding investors and pitching to investors and finding deals and doing a great job at operating them. And then leaving the back office to our side that we can do that while you guys sleep. I think the other piece is professionalism too. And some of that comes in terms of the portal that we decided together to use, but also in terms of how it's presented to investors and in terms of distribution calculations and how they're paid and kind of removing some of the risk of human error from, you mentioned manual calculations. So a lot of what we worked on when we first started supporting you was not only migrating the data, but making sure that the calculations were set up to be as automated as they can. There's always still room to kind of trust but verify and audit what those distribution allocations are looking like each quarter, but being able to lean into a system that tracks and presents to investors preferred returns, outstanding capital, management fees, different splits, whatever the hurdles might be. It's been extremely helpful to have that housed in a system that offers, as you mentioned, both transparency to you as the GP and to your limited partner investors.
Yeah, I think to add to that, the security that comes with both funding into the portal and funding from the portal. So prior to working with you guys, all of our when we raised capital, that was all manual. It was all done via direct, or excuse me, it was all done via wire instructions that were emailed and then second text messages to confirm that there was no fraud or anything like that. And then there's
Yeah.
this constant watching of the bank account to make sure, okay, they arrived, and then letting LPs know so that they could sleep at night knowing that their wire arrived. Whereas with the system now, and you can kind of spotlight a little bit more, but it takes care of all that automatically.
Yeah, pretty seamlessly too. So part of the investor onboarding process is capturing the investor's bank account where they're directly authenticating through a secure integration with Plaid into the portal. And so the portal then has access to their bank account without actually knowing the account number, routing number, right? That's all housed behind the scenes securely. But there's a lot of benefits to that. There's the security, there's removing the risk of human error that, maybe you fat finger an account number or routing number into an ACH template or a wire instructions. Um, but there's also timeliness when you're in the midst of a capital raise and you're getting investors onboarded through the subscription agreements. And if you're able to kind of capture their signature, their bank account at that point in time, it leaves you with options where you could collect their funds right then and there and have them in your bank account the next business day or shortly thereafter. Or it allows you to say, okay, we're 2, 3 weeks away from closing on this deal. Let's get everything signed. And in a week and a half, I'm going to go in and capital call everybody who committed to this project. And again, have the funds relatively quickly. And as you mentioned, flows through the system. So we have a full audit trail to see when they funded, when did the funds land in our account, and then us on the fund admin side be able to reconcile that with the bank activity, so the financials properly reflected as well. It's a good experience for investors, very smooth and seamless, and it helps expedite the process on your side and kind of remove quite a bit of both painful hurdles and risk of error.
Yeah, the same thing happens on the other side. So when capital comes in, both the sponsor and the investor are notified that your capital has arrived in the account, and the system starts to track the pref hurdle starting on that date. But on the other side, as we do distributions, both the GP and the LP is notified that distributions have gone out. We're also notified that they've arrived in the recipient's bank account when the ACH actually arrives. So it's just such a seamless thing. I think the huge message to other sponsors who are seeking to solve for all this manual activity is it automates all of it, and it takes that. And it also, for the LPs, it takes the potential for human error or some kind of interception of money moving. It takes that out of the equation.
Yep. And again, back to the professionalism, it gives the limited partners a feeling like they're logging into a bank account and seeing their transaction history, receiving their funds, getting statements and reports, just like they would if they invested into, a mutual fund or publicly traded equity. So it's something that's well received on their side.
Let's talk a little bit about tax season. So the experience of the investor is they get the K1 uploaded into the portal and a notification that your K1 is here. But let's talk about
Yep.
what happens in the background leading up to that and how delivering K1s on time. It takes a lot of forethought and a lot of work to execute.
Yeah, it does. And so for me, it starts in the middle of the year before year end even occurs. And it's about earlier we talked about kind of monthly and quarterly procedures. Those quarterly close processes where you're putting together financial statements for investors, that's the first huge step. And so I think a lot of smaller operators overlook the importance of that, of not just like reconciling a bank account throughout the year, but truly closing your books and having complete financials throughout the year. Because it puts you in a position, first of all, in the fall, so call it Q3 to early Q4, if it's appropriate with your CPA, you can start some of the tax work in advance. So you can be feeding them new investor information so they can start to set up the software to be prepared to issue them a K1. They can start to look at the fixed assets, any sales that you had or acquisitions that you had, and start to push that data into the tax software. So there may be an opportunity for some interim procedures, but even if not, if we have timely financials through Q3, that means by the time we get to December, the end of December, we really just have to finish Q4, which usually just means closing out the final month of December, and as fast as we can get financials over to the tax CPA, so that we're almost ahead of them. A lot of times they're waiting till mid to late January to even have tax software ready to use to file the partnership returns and to push out K1s. Especially this year with the new tax act in place, there's going to be new forms, there's going to be new rules, both 2025 and 2026 that could delay this process. I know we saw that after the 2017 tax change that some of the tax softwares weren't quite ready to meet the deadline. But that doesn't change for us. We still want to be ready. We want to have clean work papers related to the financials, to the properties, to the investors in the tax CPA's hands as early as we can in January so that they can do their work. And inevitably, there's some back and forth making sure that we've got the right tax ID numbers and we know if an entity is disregarded or whatever the specifics are. But that gives us time, gives them time to prepare the return, gives time for back and forth review, and then hopefully, if everything goes to plan, meeting the March 15th deadline of getting K1s to investors. Um, I think we often see in the space groups or individuals that are investing into alternative deals like yours. A lot of times the reality is they are extending their personal return. But even if they're not, I think it's important that we understand that for them it's a stressful thing that they need to have their taxes done by April 15th or at least have a good estimate of what they owe.
Hmm.
And to do that, they need their K1. And so that's kind of like, as you mentioned, the process that occurs to get to that point of March 15th takes a lot of planning, but if done correctly, you can get all your dominoes to fall in the right order at the right time to get there.
Yeah, we have a mix across our LPs. Some of them extend and some of them don't. So our view is let's just assume that nobody will extend. Let's try to hit that March 15th deadline every year, which we've been pretty good about, um, so that they can keep their tax appointment. And if they're missing a K1, it's not going to be from us.
Right.
Yeah.
Not from you or not from any of our clients. I think we've been pretty lucky in terms of getting K1s out on time. And it tends to be like the groups that we see that do have delays. That sometimes it's out of their control, sometimes it's not. Examples where it's out of their control is when it's, a fund of a fund of a fund, and there's K1s that need to flow
Hmm.
back upstream, which it hasn't been the case with your offerings. Um, it's that, or it's the groups that wait until mid-January to start thinking about closing the books, and then they got to go back through all of the prior year and try and remember what happened and answer all those questions. So, yeah, advanced preparation and having everybody, including the tax CPA, on board with what the timeline's going to be is really key to getting there.
Mike, I know that we haven't, we've been fortunate. We're in the manufactured housing business, which is very stable, and we haven't had the need to pause distributions for any reason from inception. But just in the favor of the audience, what does that look like when sponsors get in a spot where they have to pause?
Yeah, I mean, we've seen several groups that have paused distributions, and I think it ranges from distress to just being conservative. And so, um, what it looks like depends on the communication that the sponsor puts out there. So I think with clear, transparent communication on what's happening, like, hey, we've run into these hurdles, whether it's cost of material or being able to lease up as expected or finish development, whatever it might be. I think in the cases where sponsors are transparent and they're being conservative with maintaining appropriate reserves of cash on hand to ensure that the underlying properties are going to be successful, I generally see that that's received fine. I mean, you might have some investors that are disappointed, but I think for the most part, you see that they can't fault a sponsor for having some unintended items on the roadmap, and but being transparent, being smart with the cash flow of the syndication and what flows down to investors. I personally have not, fortunately, knock on wood, been exposed to too many distress situations. I've seen deals that haven't gone great, but nothing in terms of pure distress where cash flow isn't going out. I've heard of these, and I've heard of the lack of communication to investors in some of those situations. So, unfortunately, it does happen, and the markets, depending on what asset class and region you're in, the markets have been a little bit more challenging in the last few years than they were prior to that. But again, the lesson that we've learned and what we've seen work best is really a huge emphasis on transparency and communication, so investors know what's going on.
Yeah, yeah. Share good news, but share bad news faster.
That's right.
What asset classes or regions is there some kind of commonality there that you see the distress or the pause distributions?
I guess I haven't seen a specific trend. I feel like the whole real estate world has been kind of watching the last few years to see if a shoe is going to drop and if so, where. So haven't seen any like overarching themes other than, an emphasis on cost of construction, cost of materials that have impacted pro formas. Interest rates have obviously stayed up. So I think that's impacted both acquisitions and sales. We saw a period from 2020 through maybe early 22 where sales prices just kept climbing up, and so I think you have groups that didn't exit at that time, but had some number in mind that they thought they could, and maybe their investors had that number in mind as well, and they're kind of holding on to see if they can find an exit there, but aren't currently today based on where interest rates or insurance costs, for example, might be at that are impacting their valuation. So no overarching theme that we've seen other than just in general slower activity from a capital transaction perspective.
Yeah, well, maybe we should consider ourselves fortunate. I think it's the manufactured housing asset class. As I talk to other owners in this space, I mean, they're experiencing something similar to what we're experiencing. So I think it's more the asset class than it is the operator. Let's talk about modeling out um, offerings and the consultative value that you guys bring to the table.
Yeah, I think outside of ongoing fund administration, we've been fortunate enough to support groups with ad hoc projects. So just a few examples. 5210, you guys went through a migration from a few disparate systems to putting all of your operations and financials into your property management system, which has been successful in terms of consolidating and simplifying where all your data lives. That's one example of a project that we supported you with. Another thing that we've helped groups with in some aspects is modeling. So future funds, as you guys have ideas on how you might want to reshape, for example, your cash flow waterfalls, what's going to investors, what might be attractive to investors while still um, respecting the carried interest concept for the general partners. And so yeah, I would say similar to previous comments, we may not be experts on underwriting mobile home parks, but you guys are, and we are experts at understanding on how a portfolio of mobile home parks, how the cash flow and the net income from those properties flows up to a fund and how it might flow out to limited partners in terms of preferred return and return of capital and upside beyond that. And so that's an area that we've been fortunate enough to support you and some other groups with looking ahead at what might work for future offerings and um, how it would play out within your model.
Yeah, again, allows us to stay focused on our expertise in the asset class, but have a resource that we can tap into with this pool of talent that can help us understand what the future could look like. So that's been hugely beneficial. So Mike, hey, thanks a lot. Appreciate you sharing what Red Cedar does for us and potentially could do for other sponsors that are um, raising capital in a pool for commercial real estate. I really appreciate your time, and this is it's been very insightful.
Yeah, thanks, Jack. Always appreciate your time and the opportunity to speak to you and to your network.